Hello guys and welcome back to the channel. Today we're going to be covering a couple of pieces of hot news that I think you should really know about. And if you haven't already, subscribe, drop a comment, click that bell, and help us support the channel. So some news we're going to talk about now is the US lawmakers are urging the Treasury and the IRS to actually hurry up and implement crypto tax rules by 2 years. That's coming from Elizabeth Warren, which is the US Senator, and Angus S. King, and they're actually really pushing for the department to hurry up and do this. So there was a joint letter that was addressed to two different regulators, and the senators raised some concerns about a 2-year delay in actually getting those rules enforced, and they're expected to cost the federal government billions in tax revenue. So pretty much what they're telling you is that, hey, we don't have enough money, let's tax the crypto guys and take their money, kind of thing. So some experts are estimating the IRS actually lost around $50 billion annually of 2022 because of crypto traders' lack of understanding or intentional avoidance of tax implications. Well, sounds like an excuse. But the lawmakers' concern arises from the recently proposed regulation by Treasury Department and the IRS, which aims to regulate the vast and complex world of cryptocurrency. So some senators lauded the substance of the proposed regulations. Well, of course, that's meaning the rule definition of brokers and digital asset. So they define brokers as, well, a party that facilitates crypto sales and knowing the identity of the seller and nature of the transactions. And digital assets is referring to the digital representation of value, according to a cryptographically secure ledger or something similar to this. So they said that the delay in 2021 Infrastructure Investment and Jobs Act's directive for new crypto broker reporting requirements in all tax returns that were filed from 2024. They said that the Joint Committee on Taxation predicts requirements could actually generate a significant tax revenue in their initial years. The senators wrote, quote, "The time to act is now," unquote. So both Warren and King actually are still begging for everybody to hurry up and implement this so they can start making your money. All right. So the next piece of news we have is Bitcoin futures market is actually overheating. And so can we expect some kind of volatile storm coming up? Now, Bitcoin open interest is actually climbing recently. So an analysis on CryptoQuant quick take post explained that the open interest, has actually seen some rise during the past month, and the open interest is an indicator measuring the total amount of Bitcoin future contracts. Now, the value metric goes up. It means that the investors are opening more positions on the futures market right now, and since some of those new positions usually come with more leverage, a trend can actually increase the overall leverage in the sector, and it can actually make the price of the cryptocurrency more volatile. But the indicator decreasing implies that the investors are either closing their contracts or getting liquidated. So this kind of trend is actually becoming more stable. So in between, we have the short licks and the long licks. The long licks here, is represented by this graph here. So the open interest is right here, which is in question. But the graph had fallen relatively low back in August. Still, the metric started to turn around again in September and has actually climbed appreciably as well. Now, each time the indicator has actually entered the zone during the last year, it has exited with a sharp plummet, and these plunges have caused the occurrence of the liquidation squeezes. Now, if you're not really quite sure what that liquidation squeeze is, it's where a sudden swing in the price liquidates a large amount of contracts at one time. And it only helps actually fuel the price more further and even resulting in more liquidations. But liquidations can cascade down like a waterfall, and so the open interest naturally is going to fall. Now, Bitcoin open interest can be one way to watch in the coming days, and the metric entering inside the volatility zone can lead to a sharp action for the asset price. And Ellison is revealing that Sam Bankman-Fried's plot to limit Bitcoin to 20K. Shame on you. All right. So she mentioned a note saying that keep selling BTC if it's over 20K, hinting at the deliberate attempt to the cryptocurrency's value below 20K mark. But those interventions could actually greatly affect the dynamic of the digital currency market. Ellison actually brought to light even more concerns regarding some of these practices with FTX Under Bankman-Fried's leadership, Alameda Research borrowed around $13 billion from FTX clients by September of last year. And she revealed that the platform used these funds to clear debts and serve as collateral for some more investments, which actually made more questions about the transparency inside of the company. Now, as the trial is actually kind of going on, the defense strategy is also kind of unfolding, and Judge Lewis A. Kaplan rejected the plea from the legal team, and they had hoped to bring evidence related to the role of counsel and formulate the loans given by Alameda Research and the cross-examination of Gary Wang. And if you're not really quite sure who he is, it's the former FTX chief technology officer. And actually, this move is followed by the filing to cross-examine Ellison, suggesting that Bankman-Fried had instructed her to enable auto-deletion features on some of her messaging accounts. The defense argues that highlighting Alameda or FTX legal team's involvement may demonstrate no criminal intent despite of the claims. That's all I have for you today. Let us know what you think about the situation with Sam Bankman-Fried. Are we looking for more liquidation coming up with Bitcoin? Let us know. Support the channel. I will see you guys again next time.